Good morning, everybody. You are watching a live daily market outlook prepared by Windsor Brokers for Wednesday, 6th of February 2012. The markets at this morning, the beginning of European session, basically, Euro comes under pressure again. Sterling remains under heavy pressure, aiming lower after posting a fresh low just ahead of 156, still focus on the downside, retesting the current recent low, while dollar yen remains the top performer despite screaming technicals that we mentioned also yesterday. Continues to head higher, and the 94 psychological barrier has so far been tested, just running higher. Basically, the Japanese yen hit its 33-month low against the US dollar and the lows against the euro, basically as investors piled back into the easy one-way trade on view that more dovish Bank of Japan governor will soon be installed to push through aggressive easing measures. As said, the pair reached 94.02 was the highest traded so far, and breached after breaching a key chart points just under this level. This marks approximately 38.2% retracement of 2007-2012 decline as yen extended the rally sparked by the news. Bank of Japan Governor Shirakawa will step down 3 weeks earlier before planned. Some actions in the beginning of European session where the dollar jumped higher against the majors, while the commodities are slightly lower. That keeps, especially for gold, overall negative tone still in play, but still we are within the range defined in the past 1 week, and yesterday's attack at the upper boundaries of the range failed to break higher, so we're back somewhere in the mid-range, approximately 1670, while the crude oil extends its near-term corrective action of 98.22, dipping slightly below 96.00, and a quick recovery regained levels close to regained the 97 barrier, but still negative tone sees now more potential for some stronger corrective action. From the releases yesterday, the U.S. service sector showed the growth in January, and the job index set a 7-year high according to the ISM release. The services sector expanded, although the pace slowed slightly from the previous month, with the robust jobs growth offsetting slowness in the new orders. This is according to the yesterday's report. The survey that was consistent with the moderately growing economy, and helped allay fears that 0.1% contraction in U.S. economic growth in the fourth quarter might turn into something more lasting. The jump in the employment index, which hit its highest in 7 years, pointed to a labor market that should continue to strengthen in the months ahead. The Institute for Supply Management said its services sector index is slightly to 55.2 last month from 55.7 in December, and the reading was in line with economists' forecast. I do apologize. From today's calendar, not much to be seen ahead of tomorrow's. That is quite busy, and a lot of releases will be seen tomorrow. We are expecting a quite strong market action. We have the German factory orders that are due at 11 o'clock GMT as the first significant release, and according to the forecast, that shows 0.8% increase in the December compared to draw of minus 1.8% in November 2012, signaling giving some positive signals for the further recovery of the German economy. From Canada, PMI for January is due at 1500 GMT, and the forecast is above the previous 52.8 release at 52.8 at 53.2. Crude oil inventories come at their regular time at 15:30 GMT. 2.8 million barrels build is seen during the past week compared to the build of 5.9 million barrels in the previous week, and that will be all from Europe and America. Quite a poor calendar today on Wednesday. Some more important data coming from down under. New Zealand, the employment change and the unemployment rate are due at 21.45. Fourth quarter release. Unemployment is expected to dip to 7.1% from 7.3% in the third quarter. Improvement in the unemployment rate, while the employment change is expected to add 0.4% new jobs compared to the draw of minus 0.4% in the third quarter, showing overall a positive tone in the New Zealand's job sector. And finally, the technicals that most of you are looking for. We just had a brief look, as lack of any significant news and quite poor calendar will most likely let technicals to drive the markets today on Wednesday, which is 6th of February 2012. We're going to take a start with the single currency. As shown on the hourly chart, the initial strength that was gained on the bounce from 134.58. This was the fresh low established yesterday on a pullback from 137.10. I think it's better seen on the 4-hour chart, ahead of more significant supports at 134.37, which is 38.2% Fibonacci retracement of 129.96 to 137.10 rally, and of course the previous peaks and the consolidation range tops at 134.00, bringing back near-term bulls and building up some bullish momentum. However, the price action that jumped from 134.58 failed on approach to 136.00. This is a psychological barrier, and subsequent weakness that accelerated during at the beginning of the European session now brings again a risk towards the downside, as the pair lost its initial momentum gained on shown on the hourly chart, and failing to clear 136.00. This is close to 50% of the entire down move from 137.10 to 134.58, shifting the focus again towards the downside. Basically, we see the main risk now on a break below 135.00, the psychological support, and yesterday's intraday low that will shift the focus down towards 134.58, and the main risk will come on a possible break below this level, as this will confirm the failure swing on the hourly chart, shown on the basically shown on the both 1 and 4 hour, will confirm the failure swing that is a bearish pattern, and most likely open way for some stronger corrective action on the downside. As we said, we have 134.37 and the 134.00 seen next, holding above 134.58 might signal some further consolidation. Basically, if we see the support at approximately 135, then it would still keep hopes of a possible fresh attempt higher. However, break above initial 136.00 and the 136.14 that marks 61.8% retracement is required to keep again to bring focus back towards the upper boundaries at 137 and 137.10. That might bring on the fresh extension higher focus towards 138 and the 138.32 that marks 61.8% Fibonacci retracement of the larger 2011-2012 descent from 149.38 to 120.42. Current congestion, basically the negative signal was given on yesterday's close around the 200 days moving average, slightly above, but still the pair shows lack of strength momentum to clear the weekly 200 days moving average. That is seen as one of the important elements in order to resume the strong rally from July's low at 120.42 and possibly test 1 38 and the 138.32. However, underlying bull trend is still intact on the larger picture and still keeps upside in focus, as shown on the weekly and the daily chart. With the current movement, still could be described as corrective, as long as we are holding above 134 as significant support. From the other side, the cable remains under heavy pressure, especially after losing the near-term base and the attempt of leaving a double bottom 156.73 and 156.84, with the two attempts higher failing initially at 158.77 and the second one yesterday at 158.04. Failure to regain to clear a significant and psychological 158 barrier produced a fresh weakness, acceleration lower through near-term base 158, 156.73, 156.84, dipped so far to 156.29. This is our initial target, 156.34. I do apologize. It's shown on the daily chart. 156.34 is the low of 16th of July, 16th of August 2012, and then we have psychological 156.00, a barrier that coincides with the 100% Fibonacci expansion of the latest wave down from 158.04. That is basically acting as our next downside target, as the recent low posted yesterday at 156.29 has now comes under pressure. It's been actually tested so far with the descending 10 days hourly moving exponential moving average, so far capping the upside, and the descending other two 20 and 55 days maintaining the recent downtrend, seeing again more potential towards 156 as initial, and then we have 155.30 that marks 76.4% Fibonacci retracement of the larger 152.67 low of 2012 to 163.80 peak of 2012, seen as the next target in case of break below 156.00. Overall negative tone on the lower and the larger time frames keeps the downside in focus, as initial barrier at 156.74, 156.84 so far stays intact, as the corrective bounce was capped at 156.65 by descending 10 days moving average, showing not much prospect towards the upside at this point. However, break above 158 on the larger picture would signal near-term basing attempt and would provide near-term relief. Otherwise, more focus is still seen. Firm focus actually stays on the downside targets 156.00 and the 155.30. Dollar yen, despite technicals that are pointing, that are signaling some stronger corrective action, remains firmly bullish. Fresh action higher touched this morning 94.02. It's fresh 33-month high, resuming its overall bullish rally from sometime in, if we see it, the latest acceleration started sometime in September 2012, gaining from a 77 level to 94, and still showing no signals of any reversal, despite, as we can see, the daily indicators are all well in the overbought territory, yet yet showing any signal of reversal and pointing higher. That opens way towards our next upside target, which is 94.97 is the peak of May 2010. This is upside the target, and the regain of this level is set to signal full retracement of 2010-2011 descent, 94.97 to 75.55. That also marks all-time low for dollar yen, and basically this will confirm the base on the larger picture at 75 zone, and the break above to signal some stronger recovery, and possibly to look for extension up towards 97, 98 zone as initial upside targets. Initial support now stands approximately, the first one is around 93.50, while 93.00 is seen previous peak at 93.17, seen as the next one. I think we have it better here on the 4-hour. No, it's better on the hourly of the rally from just see 92.11. If we take the latest rally higher, then we have it approximately 93.50, 93 zone as the next one, while 92 zone signals break point. This is around the 61.8% retracement of 90.73 to 94.02 rally, and any pullback should be contained there or above 92.00 to keep the bullish structure intact. Otherwise, more firm signal of stronger reversal will be given on the break below 92.00. And finally, dollar Swiss is attempting at the through. Actually, it already broke through the recent 1-week consolidation tops at approximately 91.20, signaling a stronger retracement of the latest down leg from 92.25 down to 90.20, approaching 61.8%. Our initial barrier at 91.20 has now been cleared. 91.47 is the 61.8% retracement, and seen as a trigger for some stronger recovery, as the hourly studies are showing some improvement and building up momentum, while 4-hour indicators require break above 91.50. 60 50 is also 55 days exponential moving average of the 4-hour chart, and pardon, 91.60 is 38.2% of the larger 93.87, 90.20 down leg, with clearance of 92 as psychological resistance, and 50% retracement of the entire move required to signal recovery underway and the open way for some further gains. Otherwise, underlying a bear trend shown on the daily chart still sees the downside favored, with the current pardon, move could describe as corrective, as long as we are holding below 92, and the 92.50 break above 92.50 would provide some relief. Otherwise, focus remains on the downside, and the current pullback sees scenario of a lower top and fresh extension lower, as long as we are below 92.50. On the downside, the immediate target is 90.00, break of which to open lows at 89.30 and 89.00. Commodities, stronger dollar brings crude oil price under increased pressure, despite yesterday's bounce from 95. Approximately 95.90 up to 97.00, with acceleration seen this morning as the bears on the hourly and 4-hour ADX are taking control now, and they're showing the downside is more vulnerable for some stronger corrective action of 98.22 recent peak, and 98.22.27 and 98.54 is acting as a strong barrier, and so far limiting the upside, as the crude oil is still in the strong uptrend from 85.20 low of 11th of December 2012, with the current action still seen as corrective, as long as we are holding above 95.00. Currently, the hourly structure is turning more negative following the recent break, and the loss of 95.88, that is yesterday's low, could produce some fresh weakness. 95.72 is the immediate support, Fibonacci 76.4%, and since we had the 96 as initial support, that hasn't been clearly taken out yesterday on a slide to 95, 88, 95, 90 now. I do apologize, there was a cut in the connection. The oil price is in the corrective action and open way for some stronger reversal that will be looking down towards 94.60 and 94.00 initially on the upside. Yesterday's peaks at 97.00 now offer a solid resistance, as this also marks approximately 50% of the latest down leg from 98.12 down to 95.88, and so far capping the upside. Any break, clear break above 97 would avert immediate downside risk. And finally, yellow metal. Failure to clear upper boundary of the recent range that stands at approximately 1683 on yesterday's strong rally and subsequent sharp reversal still keep the yellow metal within the recently established range of 1683 and the 1657, but a near-term structure is now lost its traction as the price broke lower and tested 1666 so far. Also important is the slide below the descending bear trend line. It's the trend line from 1695 peak of 23rd of January, proving that recent yesterday's break higher was false, and the shifting again more focused towards the downside. However, break of either side of the range is still seen as required to define the near-term direction. We have on the upside around 1683, on the downside 1657, somewhere in the midpoint at this point, but return below the descending trend line sees again more risk towards the downside levels. Immediate support is at 1666. This is yesterday's low, 1661, and then finally the range floor at 1657. 4-hour structure is still in the positive territory, but losing initial bullish momentum, while hourlies are now breaking into the negative zone. Immediate risk is set down at 1666. However, rather neutral tone is still seen as long as the price holds within the 1657-1683 range, with break of either side required to define near-term direction. Also, the daily chart shows rather sideways movements with some positive elements seen on a break holding above 200 days moving average that is currently at 1663, coinciding with the previously mentioned supports, and any break lower would turn immediate risk down towards 1657 and a more significant 1650 low of 28th of January 2012. The focus should be on the upper boundaries at 1683, on the downside 1657, as most of the investors are still not sure what direction to take with yellow metal. Initially, the weakness was caused by a stronger risk appetite that moved investments from safe haven gold to the more risky assets. And now a slight reduction in the risk appetite might bring more attraction towards the gold, but still a lack of momentum to pick up the growth and regain initially range top at 1683 and the more significant 1695, 1700 barriers sees the current movements showing indecision. This is also confirmed by double dojis seen yesterday and the day before yesterday, showing that investors are still lacking the clear direction and the idea of whether to jump back into the gold or keep away from it. That actually results in the current past 1 week sideways movements within the 1657, 1683 range. And that's all from me for today. I would like to thank you all for attending our session. We are back tomorrow morning at the same time at 8 o'clock GMT with the fresh updates. Reminder that tomorrow's calendar is full. We have 2 central banks also releasing their rate decisions, and more significant is the monetary policy kicks with the Bank of England at 12 o'clock GMT, and then comes 12:45 is a Bank of European Central Bank with the Mario Draghi speech due at 13:30 GMT, where we'll have some more details about further steps of the European Central Bank. Until then, I wish you a nice Wednesday, and of course good and profitable trading. Good luck.